What's up, guys? JJ Fade 23. Just want to make a quick video about reversals on large caps. As you guys know, I'm not a financial advisor, but I do use very systematic way to break things down to the simplest thing for me. Okay. So, guys, if you go and look, I don't care how you want to, I don't care what you want to use, how you use. I'm not going to get into where I use what I think are special key points. Everybody knows I like daily levels, weekly pivots, and EMAs and stuff. But the point is, right, wherever you decide, right, wherever you consider to yourself that is a key level, okay? Let's say, for example, all right, let's see this pivot right here, all right? This is a pivot that we obviously know now, that we bounced off of. Now, obviously, this is a different kind of thing, but obviously you have multiple red days and an extension down to a pivot. But guys, the point of the story is, all right, at any reversal place, whether you're looking for a reversal into resistance or you're looking for a reversal on a pivot after a down move or a pullback reversal, whatever the case may be. So let's use SPY right now, for example, okay? So what do we know about this? What can I see from looking at SPY? We've been in a crazy uptrend. We've topped out. We've pulled back to the mean once. This one didn't pull back very much. Now we pull back again. Guys, I like to judge. This happens quite often. If you notice this, right? Look, for example, right here. See, this is the daily 8, okay? Look at how when we pulled back right here, we went only a little below the daily 8. Then look what came up here. Now look, we pulled back only a little below it again. I like to judge stocks like this. Look, all right, over here, we pulled back right to the 21, a little below it. Look, we pulled back right to the 21, a little below it. Now look, this pullback came a little above it. Guess what? This pullback came a little above it. Now we touched it. Now look, now the next one touched it. I like to judge. Look, we touched it again. I like to judge based off what the previous pullback did. Okay, if you notice right here, look, we pulled back to the 8. So now I'll be watching the next time we pull back to the 8. Boom. So now look, guys, last time we pulled back past the 8 right here. Look, this time we only pulled back to the 8, but last time we pulled back past the 8, we went right between the 21 and the 50, okay? Right in the middle. So now that means if that was going to happen again, we could possibly pull back to in between the 21 and 50 again where we have a key level of support, all right? But before that, we have the 21 again. So we also have pivot right here, okay? So we have the 21 plus a pivot. So the two levels that I would be watching on SPY for now for a bounce would be this level right here because we have a pivot plus the 21, and we've had like 3 red days already. And even better is if it came down to here, which would be a multi-touch pivot and a strong demand where we blasted off last time, and we pushed off this level 4%. For 4.2% off that level, that tells me it's a strong level. So we have multiple touches. We have a strong push off it, and now we could come back down to it. Now, I don't care because I don't guess, right? It's going to be one of these levels. Where am I going to trade it? Well, the point of this video is this, right? There's only 3 ways that I enter trades for the most part, okay? Now, that is an extension or a fake breakdown, or a higher low, aka secret setup, okay? Which I'm not going to get into the details of that because it's the best setup ever. But I'm going to tell you this, okay? I don't need to guess that if this level is going to hold, because what am I going to do? I'm going to put on the 10-man shot, all right? Now, I know my levels, okay? I like this level. And by the way, guys, if you don't have something, I'm using a different TOS setup than I usually use. Normally, I would have it would look like this, okay? So the white lines are pivots. The green dotted line would tell me that this is the 21 on the daily chart, okay? So it would look like this if I was using my regular setup. I'm just on a different computer. And then same thing for this. The 50 EMA is red. Well, then when I'm on my intraday 10-minute chart, there would be a red dotted line here telling me that even though I'm on the 10-minute chart, this is where the daily 50 is, okay? It would be a red dotted line. And also for the white, which is the sorry, guys, I said the 34. I said the 21. This is the 34. This is the 21, so this would be white. Sorry, I'm screwing you guys' brains up right now. Yeah, so the white line right here is the 21, so this would be a white dotted line telling me that that's the 21. So I don't have to keep toggling back and forth if I don't have the daily chart and the 10-minute up. And also so on for the same thing for the 8, right? So this is what my 10-minute chart would look like this. When I switch to the 10-minute chart, it would have these already plotted on there. So I know exactly where they are. And I don't have to even look at the daily chart. I already have my pivots plotted because they're white lines. And I have my EMAs plotted. See, like, let's say I wanted to trade this bounce back to the 10-minute 21. I also know the daily 8's right there, right? So we have a support break here. We start the downtrend. We have a bear flag that pops back to the 10-minute 21. We have the daily 8 right there too. We get a flag break, short, risking above the daily 8. That's a different setup, whatever. Point is, now today we're talking about our reversal, right? Don't mind these. I was just showing somebody something with Heikinachis. Not with this chart, but I like Heikinachii candles. So guys, so I already know, let's go back to the daily chart again and look, all right? This level right here is the daily 34 plus a little pivot there. It's not an ultimate high pivot or an ultimate low. It's just a middle kind of pivot, not my favorite kind of pivot. But the better pivot will be this multi-touch pivot close and in between the 34 and 50, just like that candle. But now I'm not going to guess. What I'm going to do is use my 3 entry systems, right? If we come down to one of these levels, 3 things have to happen. Well, one of these 3 things, all right? We're either going to flush hard, all right? So we're either going to flush hard, which is an extension, real hard down to my level, and then once we start to bounce and break that trend along it, risking below, that's the first way. Or if we're at the level, like now I see the 34s right here and this pivot, we would have to get something like this. The next one is a fake breakdown. Stock flushes down, quickly reclaims this level, and now we long with our stop below the fake breakdown. Or the third one is the secret setup, which is a higher low. But as you know, we can't get a higher low without getting a strong move first. So certain things would have to happen on the 10-minute chart that proves to me first, and then I would be trading the higher low on the pullback. But guys, you can look at the daily chart and see what the stock likes to do, right? Well, basically, guys, look at this. You can see right here, this is a higher low setup, right? This one did a little fake breakdown. This one did an extension to the downside, right? This pullback right here, maybe Tequila did a little fake breakdown, another little fake breakdown. Up at the highs, we got a little fake breakout right there, all right? Now, look right here. Let's say you want to, you maybe want to try to reverse. You might, if it's slowly grinding like this, you're not going to try to short it unless it maybe breaks trend or something. But let's say you got like, right here, for example, a big move up. And then what? You get a little higher low. That was actually like a double top, which you don't see too many perfect double tops. It was a little bit of a lower high, which is the opposite of a higher low, right? Let's say you're trading this long back here, back to the 21, and then you get a higher low right there. So basically what that would look like on the 10-minute chart is on this day we came down close to 21, we bounced, we did some higher highs and higher lows on the 10-minute chart, and then we pulled back close enough to this low to risk off to long. And it proved to us first by it started to bounce, So something like this, sometimes you don't always get the higher low, but hopefully intraday you get the extension to where you want, right? Remember, it's either extension, that could be short, which is a speed up in price. Remember, guys, we don't short extensions unless they're a parabolic speed up in price that is unsustainable. So what that looks like on the 10-minute chart is something like this. When the stock's trending, and it starts to speed up. That one wasn't that great, but right here, this isn't an uptrend. But let's pretend this was an uptrend. Then you got this kind of price action on the third day. That's what I'm talking about. Or, maybe say if this was like multiple days down, then you got a big flush like that, or like this. Some kind of extension at the bottom of the move or the top of the move. So for example, I have to go back a little farther. Basically like this. It's going, then it starts to speed up, get bigger candles, We don't have many down examples because on SPY it barely ever goes down, but that's basically what I'm talking about. It's just not my favorite way to enter extensions because you can easily just get caught on the wrong side of a trade that keeps going. So I prefer to get the fake breakdown, which, remember, see, I had this highlighted. Look right here, you guys. This is a day candle, right? This daily candle closed right here. The next daily candle opened and did a fake breakdown right here. This is exact trigger. It's at your level. It shows you, boom, closes. The 10-minute candle closes back above. You long it with your stop below. Right? So you're using the daily candle before you, knowing what that would look like intraday. Right? Here's an example of a higher lower here. Okay? You have a daily candle that just closed right here. Let's say you thought this was going to be a good bounce place right here on the daily chart. And then the next day it opened, you got some bottom tails that never broke this low. You start to long right here because you figure that's a higher low on the daily chart for the reversal. So try to picture what the daily chart should do intraday, right? What does that look like intraday? You should be able to look at a daily chart. Let's look at something else, all right? Let's look at, a lot of guys are trading SBUX, all right? So guys, look, SBUX, very, very strong, decent move off this level all the way back up. Comes all the way back down. Okay, you have a chance of a double bottom here, right? You think it might be a double bottom, but you don't just want to buy it, right? You don't want to just buy it when it comes down to the air. Because what if you think this is a double bottom and you buy it right here? And then what? It bounces and then you stop out. And then you get tricked. That's why you wait for triggers. Now look. Not only did this give you an amazing fake breakdown trigger right here, it also gave you a really nice extension. Well, that was actually a gap down. If that wasn't a gap down, if that was just a really extension with a bottom tail, I would definitely long that if it reclaimed the support level. A little under, over, and then definitely back over this one. But this is a good example of what I'm talking about. And guys, remember, it doesn't have to be the candle right before. It has to be the candle usually in a group. So basically like this, right? You know, say for example, right here, right? Maybe this candle came up. Maybe this candle didn't come right back down that day, but then this candle did. Boop, boop. As long as it's, 3 or 4 candles, which making that bottom, right? A lot of times it's only 2 like this or 2 like that. See, you got a lower high right there. Right here, you got a lower high. These ones didn't come up close enough to give you great risk reward, but this one did. You got your lower high right here. And this is the level you thought was going to be a reversal. Well, if you didn't want to just short it while it's going straight up, what do you got to do? You got to wait. Wait for what? A lower high. Boom, here it is. How do I know what's a lower high? Well, how do I know where is there going to be a good risk reward? Because once it falls away from my level and shows me that supply came in, now I use my fibs, and I want to be shorting above the 61 fib to know that I have good risk reward off the high. The farther it goes up, the better. If it goes into the 78 fib, even better. So let's see if we maybe even got a lower high right here. See this? Pushed up, it pulled back. It did pop close high enough. Trick is, if you're going to short it right here at the 61 fib, you have to risk off the true high, or else you get stopped out with shit like this. Don't put your stop at a random place. If you think the reversal is happening right here, and it pulls off that level and it bounces back up, if you don't want to risk, look, it bounced to $1.420. If you don't want to risk $1.50, then don't short it right here. Wait till it goes higher, because you have to risk off the true place that it failed. So many traders put their stops at bullshit places that don't matter. If this is the level it failed, that's your stop, not below it. You can't think this is the reversal level, right? You can't think this is the reversal level right here. The stock comes down, it bounces back up. You try to catch the top right here. You put your stop right over here where it doesn't matter. And then it comes down and then it goes up, stops you out. Then it doesn't break the high and then it dumps. Can't do that. Now look, pull back to the 10-minute 50, the daily 50 right here, right? Oh, guess what? I think the stock might bounce first time back to the daily 50. Well, look what it did. The next day, it pushed off it, came back down, gave you an extension and a fake breakdown. As soon as it reclaims that level right on top of the daily 50, long. Boom. Right? Look, guess what? Well, it bounced off the daily 50 last time. I think it might bounce off the daily 50 again. Well, do I want to just buy it there? Maybe if we gap down and flush hard all the way to it, I'd buy that. But if that's not the case, if it's just trickling down to it, then what am I going to do? I either want to see a fake breakdown of this level, or a strong enough push on this day to know that if it comes back down towards this level the next day or the day after, I can long it risking off this level because I already know the demand was strong off that level. And here you go, right? You pushed off this level, you came back down close enough to risk off the level, and you got a sick long. And here's another, look, now we bounce back up. Look, here's a fake breakout. We got another fake breakout right here, a baby fake breakout, another baby fake breakout right there, and then look, a lower high right there. So that's all I'm looking for. Either extensions away from the mean into levels that I want to short or buy, or fake breakouts, or lower highs for short, or fake breakdowns, or higher lows for long. See? Higher low, I'll take that trade. Fake breakdown, I'll take that trade. Lower high, I'll take that trade. But know what I won't take? I won't short. I won't think this is the stop level right here. And then fucking short right here. And then hope it doesn't go back up here and stop me out. I'll try to time my short, enter in short on this support break with my stop like at some random level right here when this is the true place of field. Right? Look. Boom, strong move up. It pulls back to the 8. Guess what? We have a fake breakdown right here. We have a fake breakdown. Also, a reclaim of that 8. I'll long that right there every time. Why? Because we got a fake breakdown, plus we're flagging off the 8. This is money. If you add these together, the EMAs with the triggers and the fake breakdowns at key levels, it's like, oh my God. Number one, you're always putting yourself, look at the risk here. I'm not just going to buy this right here and hope that it doesn't. Look, if you just buy this pullback that far off the 8 and the 21.34, where are you risking? I don't know. You want to wait for it to break out again this way? Some people do like this. They wait for it to break out again, then they put the stop below here. Well, guess what? You just got stopped out. That's the whack way to trade. Why would you do that when you can wait for actual... Look at this. It comes down, it pulls back. Now we have a fake breakdown trigger and the flag off the 8. Now guess what? Goes like that, comes back up, you long it right there. 103.50, you only have 50 cents risk. How many hours is that? I can't even tell you. Guess what? Right? Now look, maybe the stock's a little extended, right? Maybe you have a support level right here. It's getting extended to the downside. Where am I going to long? Do I have a high or low right here and right here? No. And you get an extension and a fake breakdown. Actually, if this was a key level support, this one, look at this. And this is okay, guys. This is the point, right? Look, right here, look, you got a fake breakdown of this level, and it bounced off the support. You take the long. So what? You get stopped out. Who gives a shit? Next. That happens sometimes. And that is why I tend to have, like I said, the higher low and the lower high, a.k.a. secret setup, is my favorite setup of all because it shows me the actual level held before I go and try to long it. And you know what I always tell people that say, yeah, but if it moves too far off the level and comes back to it, then you might not have had that good of a trade anymore. Well, guess what? If you're trying to long this bit of a pullback anyway, you're already wrong. If you're afraid that the stock's going to leave without you and not come back and give you a high or low and still have plenty of room to go, well, then the setup's not that great anyway, right? So let's say right here. All right, come down. You think you want to trade SPY bouncing off the 50 again. So look, this is the level right here. It comes up, it comes down. Look at it, drops literally like 102.60. It drops almost $2 off the level. When it comes back up, yes, I'm looking for a short so I can have tight risk right off that level. Boom, right? Now look, maybe you have like a pivot right here, right? You got a pivot right here. Guys, it comes up, it comes down, it goes up, fake breakout trigger, short, boom. And this one was obviously, if you didn't take any profits, you might have got stopped out again, but then you got another sick trigger at that level, another fake breakout for a huge trade, right? So, point is, I'm not telling you exactly where and why I get in my trades. I'm just telling you how I get in. Pay attention to what's going on at the levels. It's almost always either a high or low or a fake breakdown or a pattern like this, a head and shoulders pattern, or a double top. You can see these things and anticipate them and wait. But my favorite one is the high or low. Right? I like when the stocks do something like this. They come down, they push off the level, and then they come back close enough to give me a good risk point. Close enough to give me a good risk point. Close enough to give me a good risk point. Close enough to give me a good risk point. Right? Same thing here. Same thing here. It's always right here. It didn't come close enough, right? That's not close enough for me to short. That is perfect. That is perfect. This one and that one's a perfect. That one's perfect. Look, this is beautiful right here. Beautiful. That might not have had that much confirmation because you can tell by looking at the daily chart. It went up. It came back. And then it opened pretty close. It popped back up. But guys, this is the other thing. This is why you have to be a master of knowing everything you need to know of trading. Okay? This one, I can tell by looking at the daily chart that didn't give me a lot of confirmation, right? But guess what else I could do? I could switch the setup a little, okay? This stock popped up. It came back right here. Now it opened right here. If this stock pops up, I'm not going to short it while it's popping up because it wasn't far enough away from this to say, hey, there was a lot of supply, it has a lot of room to travel, it might fail. No. If we're opening right here and the level, the resistance is right there, this could easily open and push right through that. But guess what else I can do? If this pops up and then drops back through the open and goes red, fuck yeah, I can short it right here, 107. Now I'm risking the true high of 170 and it's on, right? I know that if a green candle opening that close to that high is dangerous, but if it pops up and then drops back through the open price and goes red, short, 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 short. Now we got a red candle that gave us a lower high, right? Look, high or low. This is just the way stocks move most of the time. They either do a fake breakdown and go, or they come off a level and do a high or low, or some kind of rounded bottom, head and shoulders thing that you can see happening, right? If you see this candle, then you see this candle go a little below that, you can trade the fake breakdown when you stop below it, or you can wait for the next part of the pattern, which would be right here. Look, this stock has a huge supply that came in right here. Am I going to short right here? No. Am I going to short right there? No. But I'll fucking short right here. Hell yeah. Look at how tight my risk is right here. 98, risking 40 cents. I will love to short that right there. Guys, remember, the easiest way to help you with that is to put your fibs on. And don't short anything below the 61 fib. If you want to wait for the 78 fib or higher, even better, because that's even better risk reward. Now, also, you have to remember one thing, you guys. The more the stock drops before you short, the more fanned out your EMAs are going to be. So if the stock drops too far like this, 98.50 all the way down to 91, now I have to wait to the 78% fib, because even at the 61 fib, look, you still have $3 risk. I'm not going to do that. So if the stock only drops a little, maybe the stock only, look at the difference, right? Look at how far, look at right here. This stock dropped from 98 down to 91. So now look, 91.60 to 92. These are like $1.50 a pot. Now check it out. If the stock didn't drop that far, maybe it only dropped from here to here. Now they're only what? 92.74. Now they're only like $1, a little more than $1. And so the smaller the drop, the smaller the fib levels are. But something like this, you can short the 61 fib. You just have to make sure, guys, it doesn't really matter if you have to risk 96 to 98. You just have to check, can I get it back? I wouldn't do that because look, 91. Yeah, I would do that because look. So let's say right here, right? It's bouncing back up to 96. You want to risk the high, the true high, remember? Last place it failed. 98, that's $2. Well, how far is it back to his support? 93, so 96, 93, that's 1.5 hour. Just down here is like 2.5. So I might take that trade. I'd probably wait for the 78% fib, because now guess what? Now if you're shorting at 97, risking 98, now that makes a huge difference. Look, 96, 95, 94, 93. You already got 4 hours right back to this main level of support. Never mind if it breaks, right? So, I don't know. That was off the top of the head. I don't know if that was crazy or not, but just, guys, look. The daily chart. Look at the higher lows and lower highs. Fake breakdowns, right? It just, most stocks, I don't care what stock you're looking at, most stocks reverse at reversal points with the same kind of things, right? Look, fake breakdown, right? Higher low, fake breakdown. This one was tough because it just went straight down, straight back up. That happens sometimes. This one, higher low, or even another higher low right there. Higher low right there. Fake breakdown right there, right? Fake breakdown right there. This is what I'm saying. Look, higher low. So if you want to trade off the 50 or whatever, you have a support level here, plus the 50. You're just waiting for its higher low. The stock comes down to this level, then boom, gives you a higher low, bam, right? So those are the 3 best ways to gain. Extension into your level, like especially if it's a multi-day extension. If you have like 2 or 3 red days and then you get an extension into your level, that's amazing. Or a higher low setup, which has confirmation, shows you strength first or shows you a lot of weakness first if you're trying to short. And then the other way is the fake breakdown, failed over that day's high and back under, right? Something like this right here. Stock comes down, pops back up, you get a fake breakout right there, you short, put your stop above the fake breakout candle, short right here, boom, 370, risking fucking 10 points, and then look, 2, 3, 4, 5, 6, 7, 8 hours down to there. All right, so that's all I'm saying. I don't want to make this video too long. Enjoy. Happy Sunday.